Good morning, this is Mayor Valensky with Driving Markets. Stuck in traffic here, just standing, going nowhere. Do you find that where you are, that the traffic just comes to a standstill? There's absolutely no movement. Local councils and governments have closed off the streets and you've only got one way to go. So you just sit here every day in the car. It's called driving markets, but should be called standing markets. Okay, let's have a quick recap of where we're at regarding financials, where we're at regarding markets, where have they been for the last day or two. So there's a 3-day rally just finished yesterday. So the markets have gone up since Monday's fall significantly across the board. So you've got the Dow, the Nasdaq, S&P, European markets, and you've got the UK all moved much higher. On the back of what? On the back of the fact of lower oil prices. Oil prices came down last week from $132 a barrel and now are floating at around $94 a barrel, which is a significant drop. So they're actually there or lower than the start of the war between Russia and Ukraine. As far as the war in Russia and Ukraine is concerned, the biggest risk and threat to that war is China. China stated that they will come in and support Russia. They've not imposed any sanctions against Russia, and China said that they may even use their financial system to take money from Russia and float it around the world. If that does happen, then Biden has warned Xi, the premier of China, that if this does happen, then they'll impose sanctions on China. Well, what effect could that have? Well, think about it. 90% of the production of semiconductor chips comes from China or Asia. And China then has sanctions put on it by the US. China will then put sanctions on the rest of the world on its semiconductor chips because that's where the manufacturing is conducted and that's where all the exports come from on semiconductor chips. So that is a major risk. Let's look at something else that's happened also since Monday. On Monday, on a technical issue. So those people who are traders and can follow this, let's just go through this very carefully. There is a 50-day moving average on the stock indices, on the Dow. That crossed over with the 200 moving day average. It's very technical, but let's just discuss that. That is called a death cross. A death cross is normally an indicator of a bear market. A bear market is when stocks will fall. And in the last 30 years, that death cross has proven to be the indicator of a bear market. And that happened on Monday for the first time in a very long time. That is a significant technical indicator, the death cross, the 50-day moving average crossing over with the 200-day moving average. I'm still standing in traffic, not going anywhere, haven't moved. Anyhow, if that does happen, then markets will go into a significant fall. The sectors that are benefiting at the moment from increase in interest rates is the banking sector. However, the sector that's losing out on increased interest rates is the technology sector, the Nasdaq, and also home builders, house builders, and the general building sector. Those will be going into bear markets. In other words, the home builders, house builders, and suppliers, they will be suffering the effects of rising interest rates. Remember, interest rates went up in the States on Wednesday, and they're going up across the world. There's only one direction now for interest rates, and that is north. So the question is, will that Monday death cross, the 50-day moving average, crossing over with the 200-day moving average, will that be an indicator of a bear market? In my opinion, yes. My opinion is markets are only going down. My opinion is interest rates are only going up. My opinion is inflation is only going to super high levels. And again, I want to state for the record, I expect the Nasdaq to be at 7,000 by the end of this year, the Dow to be around about 23,000, and the S&P having another 30-40% drop on that. That's just in the US. I expect interest rates to be at anywhere between 4 and 5% by the end of the year. Why? Because inflation is running super high. Also, you might want to look at cryptos and bitcoins It looks like there's been significant support built up there on Bitcoin around about the 32,000 level, 33,000 level, also on Ethereum. And I think that Bitcoin and Ethereum and the cryptos are likely now to go into a bullish phase, partly because I think it'll be a hedge against inflation, and also the fact is that they are extremely popular. It's becoming more of a common medium to use in financial transactions. That's my view for today. This is Mayor Walensky with Driving Markets. If you need any information, you can contact me on LinkedIn, contact me on WhatsApp, you can Instagram, you can subscribe to YouTube, comment. Have a good weekend, have a good Friday. Speak to you soon.